Are you starting your business, buying property, or developing a new software application? Considering forming an LLC, whether in the state of your residence or in another state in our union. We're going to share the benefits and drawbacks of LLCs, why we believe most small businesses, particularly in the state of California, don't need and shouldn't form an LLC, and consider the specific use cases where you should. I'm Jay Fagan with the Maddox Group, and for nearly 20 years, I've helped small businesses and their owners throughout California and across America achieve transformative growth. Let's get stuck in. You're thinking about forming an LLC. You've been told maybe you need an LLC. You saw it on TikTok, you heard it from a friend. Everyone has an LLC, and you need one too. Well, what is an LLC? A limited liability company is a business entity, and like all corporate entities in the United States, they're formed at the state level. The ultimate goal is right there in the name, limited liability. You own a business, you have some sort of income generating opportunity, and you want to limit your risk of lawsuit or other liability injuring your personal assets. So you form an LLC. That's fundamentally what it exists to do. Your business may not require a traditional corporation model, or you believe a sole proprietor or partnership type entity just isn't going to get the job done, so you go to the LLC model. Well, for most small business owners in America, the LLC is simply unnecessary. The reason I say that is because the risk mitigation, the liability limitation, doesn't really do what it's all cracked up to do when compared to a regular sole proprietor or general partnership. You see, the corporate shell, from a litigation risk perspective, can be rather easily pierced for a great number of small businesses. And even if it wasn't pierced, the liability limits are generally only going to be well managed with insurance, really robust insurance, depending on what the risk is, whether it's general business liability, your physical buildings, employment liability, employer practices liability, that's in case an employee sues you, workers' compensation, in case somebody's injured on the job. There's a whole apparatus of insurance coverages necessary to own and operate a business in this day and age. So if you're going to have to pay for those policies anyway, and they're going to insulate you by and large from all the risk that you could undertake that isn't criminal, willful, or negligent, why go through the added cost and annual compliance requirements of an LLC? Well, in a number of states, there really aren't any annual costs or compliance or any additional work, and almost anyone can form an LLC relatively easily. Historically, Delaware has been a favorite for LLCs, and these days Texas, Utah, and Nevada are up there. And of course, if you follow social media, Wyoming has become the celebrity state for the LLC marketing apparatus. Most states impose minimal costs and compliance reporting each year to have a business entity formed in their state. So if you're thinking, do I need an LLC? Well, let's start from the top. What kind of business have you created? Are you selling physical goods, services, or combination thereof? Are you strictly a services-only business? Are you an intellectual property type business, software, algorithms, applications? With whom are you doing business? Is it just you as a solopreneur? Maybe it's a married couple doing business together, or a general partnership, a large investor group, or a robust startup. Where are you going to do business? Are you doing business in the state in which you and your owners reside, and only in the state in which you reside? Or are you going to do business across multiple states or internationally? These questions dictate the operations and taxation of the business in the state in which you reside. If you're in a state like California, we have an income tax on businesses and on individuals. It's really irrelevant where you form your LLC. California is going to tax you and that entity if you do business in California. If you have what's called nexus, business nexus in the state of California, they're going to tax you irrespective of where your LLC was formed. So what kind of business are you? Where are you going to do business? Who are you going to do business with? These are the questions that you need to really get a handle on before you decide whether or not to form an LLC. Now, our guidance is this, especially if you're doing business in California or if you reside in California. If you're providing services, professional or personal services, from hairstylists to accountants to physicians, dentists, you name it, if you're the one doing the work or the people doing the work are directly under your supervision, the LLC provides no real additional corporate liability protection over any other business type, including sole proprietors. Because in California, the corporate code and case law over the years dictates that if you're a personal or professional services business, the buck stops with you. Thus, the corporate shell just doesn't provide that promoted protection. You are the one doing the work or overseeing the work, and therefore you can be held personally liable. In these businesses, an LLC just doesn't make a lot of sense. Here again, if you're in business, it behooves you to secure outstanding insurance protection and ensure you retain a competent and qualified insurance broker in your corner. Here at the Maddox Group, we recommend Ben Jonas out of Hub International through the local Monterey insurance agencies here on the Central Coast of California. Ben and his team at Hub are spectacular. They're just good people. Hub insures people and businesses all over the world and has a variety of coverages to maximize your benefits. And I'm not getting paid anything to tell you about Ben and Hub. I just think they're incredible. They've done great work for us and our clients. I encourage you to check them out. Contact information is on our website, themaddoxgroup.com, under our TMG endorsed providers. So if you're a professional services business, the corporate veil just isn't really that secure. So get great insurance because the LLC doesn't pass muster. Further, and I can't reinforce this enough, having an LLC in any state does not create any additional business deductions or tax benefits. Sole proprietors, general partnerships, C Corps, S Corps, LLCs, they all operate under the tax code equally, okay? So you don't need to form an LLC to get a better tax return. And I assure you, anyone out there who's telling you that you do is trying to sell you an LLC. They're also likely trying to sell you on some sort of tax fraud scheme because you've probably heard, oh, I get a Wyoming LLC and you can write off your personal residence. You could write off your car and your personal expenses and so on and so forth. That's all over the social sphere. The reality is legally you cannot write off personal expenses for business purposes. There's no justification whatsoever in the tax code, whether your business is an LLC, a C Corp, an S Corp, a sole proprietor, a partnership. You cannot write off personal expenses, period. There are tax deductions and credits for certain personal expenses that do exist in the tax code. However, the LLC doesn't magically open those up for you. It's not a business-related deduction. So anyone telling you that you can, they're just straight up lying to you. Now, let's be clear. You can actually prepare a tax return that deducts all sorts of things. That's called preparing a fraudulent income tax return. There's nothing stopping you from doing it, and your risk of audit is fairly low in America these days. But it's not legal, it's not ethical, and it's just plain DUM dumb. Tax fraud is not magically made legal by having an LLC, Wyoming or otherwise. So if you're thinking about forming an LLC for tax purposes, there's no reason whatsoever to do it. And in particular, in the state of California, there's many reasons not to, and they mostly involve dollar signs. California charges LLCs for the benefit of being a corporate entity in California. Minimum tax on their income, not less than $800 a year. And with LLCs, they charge an annual fee against the gross business income, your top line sales on top of the tax, which can be quite substantial, from $900 up to nearly $12,000. Should you have a successful business, it can create a substantial state tax and fee just for the privilege of having that LLC in California. You could be the same business as a sole proprietor and you wouldn't pay those funds, nor would you have to pay for the additional tax compliance. So no additional tax benefits, no new tax code opportunities, extra taxes and fees. If you're a professional or personal services business operating as a sole proprietor or even a small partnership, the LLC probably just doesn't make sense for you. Well, Jay, when does it make sense? Well, there's a few cases where I believe you 100% should form an LLC. Most often, we're talking about real property. If you own real property, not personal property, but investment properties, we're talking about commercial or residential rentals, single family, multifamily homes, office buildings, lifestyle shopping centers, which when I was a kid, we called strip malls, commercial and residential real business property, it should be held within an LLC. In that area in particular, corporate code and case law is well established. The corporate veil or the risk liability is limited to the assets of that LLC and, of course, relevant insurance policies. You still want great insurance. However, the LLC is much stronger when it comes to real property. Now, if you're in the business of selling goods, items, widgets, if people can buy a product from you and misuse that product, the LLC may make sense from a limited risk mitigation standpoint. Now, to be objective, small retail operations, wholesalers, distributors, and so forth, they operate all the time as sole proprietors and general partnerships. Corporate entities are no substitution for great insurance and solid business practices. Some states do require an LLC or a corporate entity to license the respective business owner to operate, so be sure to review your specific case with a well-qualified business attorney. Also, if you're going to have investors in your business, investors, they just like the LLC for a variety of reasons, not the least of which it's easy to buy and sell them. You can have essentially an unlimited number of investors in an LLC, and you're not limited to the quantity and type of shareholders or investors within that LLC. Whereas an S corporation is limited to 100 shareholders and only one type of stock. So if you're going to have investors, the LLC model makes great sense for a variety of reasons. If you're going down that route, be sure you have an attorney in your corner who understands the law and practices around investors, multiple shareholders, types of business entities. And it's good practice to have a great attorney in your corner when you're operating any business, particularly in California. Now, lastly, intellectual property. I mentioned before, we're here on the Central Coast of California near the Silicon Valley, and intellectual property's everywhere around here. From creatives to software companies, musicians, you name it, intellectual property exists here. Businesses that own and or manage intellectual property, for similar reasons as stated around the number of shareholders and type of shareholders, the LLC model serves very robustly there, often because it's just easier to buy and sell them. An LLC doesn't change the taxation of business other than adding a new state-level income tax. It doesn't change the operations of a business, but it can make selling those businesses or shares in those businesses much easier. So to sum up, make sure you have a great business attorney before you execute your plan. Make sure you know what kind of business you're going to be, with whom you're going to do business, and where you're going to do business. Make the entity selection because it makes sense from an operational business strategy, not because TikTok told you that you'll save on taxes. There are some great tax considerations for small businesses who may be considering the S-Corp election and some pitfalls there as well. We'll discuss that more in a future video. Now, there are edge cases in every scenario. Of note, married business partners. We see this more and more over the years. A couple owns a business together. Now, if you don't live in one of the 9 community property states in the United States and you're in business together with your spouse, you may not want to form an LLC, as you would then be required to file a general partnership tax return instead of just 2 Schedule Cs on your personal return, which creates some added compliance expense just because you have an LLC. On that theme, for retirement planning purposes, be sure to consider reporting the business income for both spouses. All too often, I've seen over the years retirees where one spouse, generally the husband historically, was the business owner for income tax purposes. They were the line 1 taxpayer on the return. Their name was on the Schedule C, even though both spouses worked in the business. And the widow or widower is too often left with a reduced or even no Social Security benefits because no income was reported for them for decades. This isn't necessarily a gender thing. It's just that historically more men were considered the primary taxpayer and their spouse was traditionally the harder working homemaker. We all know how hard it is to run a house and to raise children. Irrespective of who is the top line on the tax return, be sure to consider both your retirement planning goals when running a business together. Ensure your business is set up for success. Make sure you have a written plan of action, a written budget, that you are competent and qualified in the business in which you are engaged. You stay compliant every year with your annual tax returns and your business entity filings with your Secretary of State, if any, which we have those in California. And you minimize the penalties and fees of having an unnecessary LLC by simply not forming it in the first place. Should you have any questions applicable to your unique situation regarding anything that we've discussed here or anything else about your business or your family finances, please don't hesitate to reach out. We wholeheartedly welcome outstanding new clients to our firm, and we're always eager to walk with you each year as your trusted advisor, helping you navigate these and any other aspects of your business operations and your family's tax and financial goals. Be sure to download our quick reference guide from our website, providing an overview of when an LLC may or may not be the best fit for you. I'm Jay Fagan with the Maddox Group. Thank you for investing your time with me today. Until next time, allons-y.